Reform for me is just a way station on the long journey to the destination.
Reforms are a marathon, not a sprint, says the Prime Minister as he tries to quell fears over slowdown in government action. Promises that reforms drive will not be hampered.
Get ready to pay more for restaurants, mobile bills and other services after this Diwali. The government decides to impose a Swachh Bharat cess of 0.5%. Sources say the centre will raise 3,500 crore rupees by the end of this fiscal.
State Bank of India is on target with its second quarter numbers. Stock surges as asset quality improves and the bank says that the worst is over. Punjab National Bank also rises as bad loans stabilize, but Bank of Baroda gets punished for worsening asset quality.
Tata Motors Kids in the second quarter post losses of about 430 crore rupees as the China slowdown hurts JLR. M&M also disappoints as margins shrink rapidly.
The Bihar verdict keeps markets on the tenterhooks. Major indices slide in late trade to end with marginal losses.
The US Pharma watchdog raises the red flag on 3 units of Dr. Reddy's in Telangana and Andhra Pradesh. The stock plummets in trade as nearly 30% of the US sales are now at risk.
That we are prepared to discuss with our friends and colleagues in Vodafone in good faith.
Government once again reiterates its stand to settle retrospective tax cases out of court. Minister of State for Finance Jayant Sinha says that the centre is ready to sit down and resolve disputes with Vodafone and Cairn Energy.
Where we're seeing some traction now is in services inflation, which was the source of the high inflation earlier.
Inflation is well and truly on the glide path since the RBI Governor Raghuram Rajan also welcomes the new draft bankruptcy code, hopes banks will succeed in the fight against bad loans thanks to new powers. That's a CNBC exclusive.
This game has been a celebration of his career.
It's a pitch Sachin Tendulkar has never been on before. The Master Blaster rang the bells at the New York Stock Exchange along with his arch nemesis Shane Warne. Good evening and thanks for joining us here on India Business Hour. I'm Nantara Rai. Joining me, Ronojoy Banerjee. Ron, you know, some of the cricketers you saw over there, they would make up my fantasy team in any of those leagues.
Absolutely, and you know what to be doing tomorrow evening at 9:30 or 10. I think I'm told that the match is going to start. Something to really watch out for.
Right, that's as far as the ringing of the bell at the NYSE goes. But now let's head to Dalal Street. The street digested a battery of earnings in a range-bound session. The Nifty remained flat, but it held above that crucial support level of 79.50. Onto the Sensex, that ended the day nearly 40 points in the red, going home at 26,265. The market breadth also remained negative with pharma, power, metal stocks, all of them leading the decline. Let's talk about the Bank Nifty, and here's why it saved the day, keeping the downside capped. And Bihar may or may not go the BJP's way, but the Prime Minister came out to bat for his government's reform credentials and promised to continue the process. In a comprehensive address that lasted almost 60 minutes at the Delhi Economic Conclave, Prime Minister Narendra Modi reiterated the centre's commitment to continue with the economic and institutional reforms.
Our aim to impress groups of experts and score points in intellectual discussions, or to achieve ranks in some international league table. Reform for me is just a way station on the long journey to the destination. The destination is transformation of India. Reforming to transform is a marathon, not a sprint.
A confident Prime Minister Narendra Modi came out all guns blazing to quell fears about a slowdown in the government's reform agenda and take on critics of the government's performance. Virtually every sector from financial services to agriculture found mention in the Prime Minister's almost hour-long address. His set themes, including Swachh Bharat, also found prominence. While the Prime Minister spoke about the improvement in India's macros, he also spelled out the government's efforts to improve efficiency of the public sector.
Interference in banking decisions has ended. For the first time since banks were nationalized 46 years ago, private sector professionals have been appointed in key positions. The pace of award of new highway works has increased from 5.2 kilometers per day in 2012-13 and 8.7 kilometers per day in 2013 and 14 to 23.4 kilometers per day currently.
The achievements of the government's efforts on financial inclusion were given pride of place in his speech. In a subtle attack of the Congress strategy to provide right-based schemes, the Prime Minister said his government did not believe in empowering the poverty elevation industry.
Empowering the poor is far more effective than empowering the poverty elevation industry. Will assist one Dalit or a scheduled tribe person and one woman in starting a business.
While the emphasis was clearly on the government's performance since it came to power, the Prime Minister did allude to more reforms, be it in the labour sector or rationalising the subsidy regime further. Whatever the electoral verdict on Super Sunday, the Prime Minister today put up a show of strength.
It's been one of the Prime Minister's pet projects, and the Finance Minister had announced it in the Union Budget. The government has now decided to impose a 0.5% cess on all services starting from the 15th of November, which will be used to fund the government's Swachh Bharat Abhiyan. Sapna Das now joins us with all the details. Sapna, can you give us an idea how much the government is hoping to garner from the cess?
Well, definitely. What we are hearing as of now, the first cut is that somewhere approximately 3,000 to 3,500 crores is what they may be raising over the next 4 months, starting from November 15 to the end of March, 4.5 months. On that basis, the annual, accrual to the coffer would be around approximately 10 to 10,500 crores. But I was just in conversation with the Finance Secretary, Mr. Ratan Batal, just to get a better sense of what the numbers look like and what the requirements will be over the next couple of years, in which he very clearly indicated that probably the money raised from the cess, or rather the requirement on the sanitation side, because the Swachh Bharat cess has been imposed completely because for the sanitation requirement. There is another aspect to it, water resources. They are taking care of that through the budgetary resources. This is what the Finance Secretary has just told CNBC TV 18. So there he said clearly that our annual requirement on sanitation would be around 8,000 crores, and hence the decision has been taken to go ahead and levy the cess. So approximately 8 to 10,000 crores is a better range to talk about in terms of the financial year requirement due to sanitation. There's also another number that's doing the rounds, and this comes from credible sources. By 2020, the requirement, the spend requirement for sanitation would be almost as much as 50,000 crores, and hence there was a need to go ahead and impose a cess. The only point here is that it may not have been at 2% or even 1 to 1.5%, because it was an enabling provision. The Finance Minister had made it very clear that up to 2%, so it's 0.5%. But mind you, this is on all services. So effectively what happens is that after Diwali, your service tax rate actually goes up.
Okay, so Sapna, thanks a lot for joining us with that. So like Sapna was pointing out, after Diwali, get ready to pay more for services. Perhaps the silver lining for consumers is not going to be as high as had been sought earlier in the budget speech of Arun Jaitley, where he has talked about 2%. It's going to be 0.5%, and the second silver lining could be that perhaps it has been is going to come into effect post Diwali. This is a story we're going to track very closely for you right here on India Business Hour. We're also going to try and reach out to tax experts for you. In fact, I understand Uday Pimprikar, the tax partner at EY, now joining us live. Thanks, Uday, for joining us here. Perhaps like I was pointing out, 2 silver linings. We've got one that is coming in post Diwali, so that should not affect consumption so much, and the other one that is going to be much lower than what we had anticipated at 0.5%.
Yeah, that's true. I mean, everybody expected a couple of things actually. One is that it would be as high as 2. Secondly, it would not be applicable for all services, but only would be applicable in a couple of, and there were like a number of services that were getting kind of identified.
Are you saying that while the CESS is not as high as we had anticipated at 2%, but that has been offset by the fact that it's going to be applicable on many more services?
Yeah, so the base is quite, quite large. It's actually applicable on all taxable services. They haven't yet come out with an exemption notification for exempting any service. So that's one. Having said that, I think 0.5% is still far more palatable for most services rather than a 2%, which would have been a fairly huge impact. And to that extent, of course, it's a better option to go for.
So let's wait and see what all comes in the exemption list, if there is indeed one there. But something else I wanted to ask you, because you brought this up, that 0.5% is more palpable, but you did hear the finance minister in February talk about 2%. So do you think perhaps over the years or over a couple of months, Arun Jaitley may go on and increase it gradually and not that sharp 2% in one go?
I would be surprised. I mean, I know that the government keeps on tinkering rates a little bit far more than what it should. But increasing rates in a couple of months, even for us, is unheard of. And I would be extremely surprised if that happens. I mean, if they wanted to impose a cess, which as a policy is anyway debatable, but if they wanted to impose a cess, imposing it on all services is definitely better than differentiating services and only imposing a high rate or small. And I don't really expect them to increase it gradually over the next 3-4 months to a 2%.
Okay, you may not expect it in the next 3 to 4 months. By then, in 4 months, it's going to be budget time. So we have to watch out and see that in the new financial year, if this cess is going to remain at 0.5% or if it is going to go up, simply because why talk about 2% and only do 0.5%? Questions to ponder about tonight, but that is going to be the new cess consumers have to pay post-Diwali, beginning 15th of November. Thanks a lot for joining us here on CNBC TV 18. Let's move on for now. All the schemes launched by the UPA government. If there's one program that the present NDA government has taken to heart, it's the Unique Identification Number, or the Aadhaar scheme, which it hopes to use most for its social benefit transfer subsidies. Speaking at the Delhi Economic Conclave, the Finance Minister Arun Jaitley and his colleagues in the cabinet, as well as officials in the North Block, pushed for a universal applicability of the scheme, saying a voluntary implementation will only hamper the very purpose of this rollout. Remember, the Supreme Court has allowed the government to implement the scheme only on a voluntary basis.
We can't have a situation where Aadhaar is acceptable for certain kind of measures to be adopted by the government, but not acceptable with regard to certain other kind of measures. There'll have to be a universal standard to be laid down. I'm quite certain that the litigation, the viewpoint of the government and those interested in enforcing it would certainly be placed before the court. And if it's necessary, the draft legislation is already ready. And therefore, that is some step which at some stage the government can take a decision to enforce.
हम सही लोगों तक पहुंचा पाएंगे, समय अवधि के साथ पहुंचा पाएंगे और अमूमन सब्सिडी को भी हम बचा पाएंगे। जो जरूरतमंद लोग हैं उनको ही मिले, संपूर्णों को ना मिले। इस प्रकार की हमने एक तंत्र खड़ा करने की प्रयास किया है।
Aadhaar again, it's been a bipartisan success story. When I left the government, Aadhaar was at 600 million, and this government, under the leadership of Prime Minister Modi, has taken it to 930 million. And I saw from his tweet that he reviews it every month in Pragati meetings, so that's a good sign. And I think that will reach 1 billion people soon, and then obviously everybody in the country will have an Aadhaar.
Meanwhile, Jayant Sinha, MOS Finance, told us earlier today that the government was ready for an out-of-court settlement with Vodafone and Ken on tax cases where the arbitration process has been initiated. Remember, Vodafone has dragged the government to arbitration over a 20,000 crore rupees tax dispute arising out of retrospective applicability of the tax law. British oil explorer Cairn Energy has also initiated a similar move over 10,247 crore rupees tax liability due to the same reason.
No, as far as an out-of-court settlement on Vodafone is concerned, we have always said that we are prepared to discuss with our friends and colleagues in Vodafone in good faith as to whether it might be possible to get to a negotiated settlement. We are always open to those discussions.
But sir, anything that we have heard from them so far, because it's already in arbitration. Similarly, Cairn also, I suppose we are now very close to appointing our own arbitrator for the case. So where do we see it practically? Is anything on the table, or are we looking at a larger roadmap?
What I would say is that in any of these situations where you are hoping for a negotiated settlement, you have to find some kind of forcing function that will enable parties to close the gap. What we don't have in either of those two cases is that forcing function yet that would actually close the gap. So let's see how things develop over time, and we, as I've said earlier, would like to be able to close out these negotiations in good faith.
So what could that forcing function be that would lead to the government resolving those mega billion-dollar tax cases with Vodafone and Cairn Energy? Do remember, right, on CNBC TV 18, we told you that Jayant Sinha had been given the task to try and find a resolution to this ghost of retrospective tax that continues to haunt the present government. It's going to be interesting to see if the Justice Eastward-led panel, the 10-member panel, is also going to be discussing retrospectivity. On to Earnings Corner, India's largest bank has declared that the time for consolidation is now over, and the growth phase is set to begin. This even as the second quarter profit beat street expectations. And it's a bad loan fall for the second quarter in a row. CNBC TV 18's Alexander Matthew gets you the story.
SBI's Arundhati Bhattacharya believes the worst may be over. And it's not blind faith. The bank beat street expectations as net profits surged 25% to 3,879 crore.
I think the consolidation phase that we were going through in the bank is now, I can say that it is currently over, and therefore we are now looking at getting back into the expansion mode. As the economy revives and our pipeline of projects also revives, we believe this is the right time to do so.
This belief is further reinforced by the fact that asset quality has improved for the second quarter running. Gross NPAs slipped to 4.15% from 4.29% in the preceding quarter, and net NPAs came in at 2.14% as against 2.24% 3 months ago. Bhattacharya pointed out that fresh slippages during the quarter were also lower sequentially at 5,875 crores and came from small accounts.
Most of the really problematic ones we have already taken care of. The ones that are still there, they have very good assets. They are working units. So to that extent, even if there is some slippage, we are confident that we can pull it back within a short space of time. So I think overall we are in a more comfortable position right now.
Bhattacharya also believes that credit growth in the second half of the year will be much faster. After all, advances grew at a marginally higher 11% in the second quarter, and this pace is expected to only increase going forward.
Today, I still believe we can do 14%. We have grown at around 10.9%, but we are confident that we can grow at the levels that we have projected.
But Bhattacharya is quick to temper these expectations with some caution. So the official guidance for FY16 credit growth is 12 to 14%. In Mumbai, Alexander Matthew.
Well, from the banking to the auto space, both Tata Motors and M&M reported second quarter numbers today, and it was a quarter to forget for both the auto giants. Sonia Shenoy now joins us here to break down the results for us. Sonia.
Oh yes, in fact, let me start off with Tata Motors first. There was a net loss of 430 crores that the company has posted this quarter, but that is primarily because of the expense that they had to incur on account of the port blast that we saw in Tianjin. So they had to make that, expense this time around. But even if you strip that off, the key number that you need to focus on is the Jaguar Land Rover margin number, which has come in at 12.2% versus 19.4% same time last year. And that's a big fall even compared to what analysts were expecting. A couple of reasons for that. One is that they've had a lower share of the China business this time around, and that's because and China is a high margin business, so that was one of the reasons. And the second is the fact that they've sold higher amount of low margin products like the Jaguar XC, etc., and that product mix has deteriorated, leading to lower margins for JLR. Even in the standalone business, they've made a net loss of 287 crores versus a loss of 1,846 crores earlier. But the net loss that they have made this time around is higher than what the street was estimating. So disappointment on both fronts. But let's quickly talk about the M&M numbers. There as well, it's an unimpressive set. Both auto and tractor segment margins have contracted sequentially this time. Auto segment margins are down 100 basis points quarter on quarter, and tractor segment margins have also fallen 130 basis points quarter on quarter. Overall for M&M, the profit has fallen about 2.5%, so no growth at all coming in. The company is stuck in low gear.
So the second quarter is one that both Tata Motors and M&M will want to forget. Thanks, Sonia, for joining us with the fine print. There's three big counters that came out with their results today: SBI, Tata Motors and M&M. But guess what? There were a slew of other banking earnings that came out. Three public sector banks reported their quarterly performance today. Punjab National Bank and Union Bank, on their part, were able to meet street estimates, but Bank of Baroda, it came out with a dismal set of numbers as a quarter. Bank of Baroda will want to forget. Alexander Matthew joining us with his analysis. So, Alex, a disappointing quarter from Bank of Baroda, even as it's in the midst of this forex scam.
That's absolutely right, Nayantara. Let's first start with the net interest income number. Here, Bank of Baroda was the worst performer. Its NII fell 4.6%. The other two were on expected lines. The Union Bank of India's growth was only 0.8%. Now, moving on to the net profit number. Here, too, Bank of Baroda took a big hit. Punjab National Bank's net profit growth was subdued but on expected lines, whereas Union Bank of India's net profit growth of 77% was largely because of sharp dip in provisioning during the quarter. Now to the most watched indicator in the banking system today, non-performing assets, where Bank of Baroda reported a shocker. The sharp increase in its NPAs was viewed by many as an attempted clean-up act, though the management insisted that there was no kitchen sinking here. Punjab National Bank's NPAs fell marginally, while Union Bank of India saw a deterioration in asset quality. Now, the last parameter is slippages, and Bank of Baroda reported one of its largest fresh slippage numbers this quarter, but the street is looking at it at the bright side of this number, thinking the worst is over for this bank. PNB slippages this quarter fell from a high of 7,400 crores in Q4, but they saw a modest rise sequentially. Union Bank's slippages rose primarily because of one large account worth 800 crore in the construction space. With that, it's back to you.
With that, it's a quick wrap of all the other earnings today. All major ONGC's net profit declined 11.3% sequentially to 4,842 crore in the July-September quarter, impacted by lower revenue and weak operational performance.
An extremely dark quarter for BHEL. The power equipment maker posted a loss of 205 crore rupees year on year. Its revenue too declined by 3.5%. What about Eicher Motors, Ron?
Well, the third quarter net profit jumped 55% year on year. That jump was on account of, in fact, that jump did not help the company meet the expectations though, which was at about 68% growth in profits, which is what the forecast was. Royal Enfield sales shot up 55% annually, and commercial vehicle sales jumped 18.8%.
Now let's talk about Reliance Communications earnings. The telecom major's second quarter net profit came in at 156 crores, even as its voice data per minute came in at 45 paise. Total income fell by more than 100 crores to come in at just about 5,300 crores, while the EBITDA margins took a hit of 40 basis points.
Generic drug maker Dr. Reddy's has landed in the American drug regulator's bad books. The US FDA has issued the company a warning letter for non-compliance with manufacturing standards at 3 of its plants in India. A move that resulted in the company becoming the biggest loser on the Nifty on Friday. CNBC TV 18's Archana Shukla has the details.
The quality management system itself, we are revamping it, bringing it in line with the new expectations of the FDA.
For Dr. Reddy's, this revamp has been tougher than expected, and the American drug regulator, US FDA, is not impressed. So the US FDA has sent the company a warning letter pointing out non-compliance with manufacturing standards at not one, but 3 facilities. That's the API plants in Srikakulam and one in Telangana, and the oncology formulations unit in Visakhapatnam. This has rattled investors since DRL relies heavily on the American market, and this warning letter could put 10 to 12% of the company's revenues at risk, as it may have to stop supplies.
US FDA has not specifically asked us to do so, but definitely when there is a warning letter, we'll have to internally discuss and find out what exactly we need to do. What actually has happened, there has been no new approvals which have been coming from this side.
So what kind of damages are we talking about? 1. The warning letters put nearly $60 to $70 million in quarterly US sales at risk. 2. Increased costs on remedial measures to win back the US FDA's confidence will put greater pressure on margins. And 3. It puts a stop to new drugs from these plants getting approvals till issues are sorted out. Analysts say the warning letters may also hit the company's complex generics business. The reason the stock reacted so sharply in trade today was because Dr. Reddy's had not disclosed about the US FDA observations on 2 other plants earlier, despite US FDA inspecting and making those observations almost a year ago. And today, the investors were taken by complete surprise. Experts also add that now, since data integrity concerns would go beyond just the Srikakulam plant, the road to recovery and resolution for Dr. Reddy's would be a long and a tough one. In Mumbai, Archana Shukla.
And that development taking the Dr. Reddy's stock down by almost 14.5%. Time now for the big CNBC exclusive interview. RBI Governor Raghuram Rajan is confident the people would welcome the new gold monetization scheme. Remember, the Prime Minister launched 3 schemes just yesterday. Speaking to CNBC's Martin Sung, Raghuram Rajan reiterated that inflation is well and truly on the glide path. Here's that exclusive conversation.
So my sense is the underlying inflation is between 5 and 5.5 right now. That's sort of the run rate. So we probably will get back to that by the end of the year.
Okay.
And so that doesn't give us a whole lot of room below the 6.
Okay.
Our sense is over the course of the next year, because of disinflationary forces, because of the weak state of the global economy, it will come back to close to 5, which is where we are targeting for March of 2017.
The last time that India tried this, I think it was 10, 15 years ago, right? Didn't really go so well, right? The government was not able to offer interest rates high enough to entice people to get into this program this time around. Is there a higher chance of this whole gold monetization program succeeding this time?
A lot of thought has gone into it from the government side, and the government is also taking some risks of the banks and of the buyer of these bonds. So it does look like a much more enticing proposition. You see, in India, a lot of people think of gold as a very important investment, partly because they have gold outflow needs down the line. There are versions with different products that are available today, but essentially, if I can buy a gold bond which pays me back in gold, I can put my financial assets to work without actually buying the gold. And to the extent that the government takes the risk of gold prices moving, banks are willing to offer this product and pay a reasonable interest rate also to investors. So essentially it's a real bond. It's an inflation-protected bond in some sense, because it's exposed to the gold price. But if you don't mind getting gold, you're essentially buying gold in advance and getting an interest rate to boot. There's another version where you bring in your gold and transform it into gold, and then they transform it into a financial asset. Let us see how that works.
Well, that was Raghuram Rajan in conversation with one of our colleagues, Mr. Sung, in Singapore. Coming up, the airfare caps will not be mandatory on short-term flights. Clarifies the government details in just a bit.